Mortgage programs are changing. FHA, VA, conventional, jumbo, they're all changing. Some programs are going away. Here's how it's going to affect you in today's market. First things first, mortgage programs. Certain things are changing, certain things are gone away, and there's been a lot of movement. Number one is what they call non-QM or non-qualifying mortgage. Non-qualified mortgage is something that doesn't fit into the government-defined box. You can kind of think of those as like almost like a old subprime-ish, like bank statement loans or investor loans based off of rent, stuff like that. Right now, there's no market for that. Now, there's still some of them out there, don't get me wrong, but a lot of them have dried up. And they account for about 5 to 10% of the overall mortgages throughout the country. Now, that doesn't sound like a lot percentage-wise, but that's a huge amount of loans when you look at, collectively $2 trillion loans being done. The next thing we're going to look at is jumbo. Now, there's a lot of talk. Is jumbo gone? No, jumbo is not gone. You can still do jumbo loans. Now, remember, jumbo loans are anything over the county loan limit. And depending on what county you live in, it could be a little bit different. For us here, it's about just over 510. So it just depends on where you live, what that county loan limit is. Now, you can still get jumbo loans, but it's going to depend on the investor that you use. So if you're used to using bank 1 and 2 and 3, and none of them have jumbos, I highly recommend you talk to a mortgage broker who has the ability to shop many, many different avenues. The next thing you want to look at is VA, FHA, conventional. Here's what you're seeing on that. The programs themselves have not changed, but the investors that give you the money for these loans, the different banks that give you the money, there's no market for them to sell on the secondary market. I'll give you a quick example of what that means. Your bank says, hey, don't worry, we keep all of our loans. That's very rarely true. Here's the way it actually happens. Your bank packages those loans, they sell them to one of the GSEs, which is Fannie Mae or Freddie Mac, or Ginnie Mae, which buys the FHA and VA. Now, what happens once they sell that, they retain that your bank keeps the mortgage servicing rights, or the MSR, for that. But even though they sold the whole entire loan to Fannie or Freddie or Ginnie, so now your bank takes that MSR and they may service your loan for a while. They may package all their MSRs, you and 100,000 other people, and sell a whole bulk of MSRs to somebody else. And somebody else is gonna buy this mortgage servicing. That's why your loan gets sold from time to time. It gets packaged and sold out. That's called an MSR, mortgage servicing right. Now, what's happening right now in the market is there's no market for MSRs. Nobody's buying the MSRs. Banks are freaking out. Here's why that's a problem. Liquidity. I'm going to sell off this MSR. It frees up $2 million worth of capital for me, which allows me to go and do something else. If I can't sell this MSR, now I'm stuck with it. So understand, a lot of things are tightening up and changing. So here's why, or how that impacts you. VA doesn't have a minimum credit score. However, a lot of lenders before said, well, our minimum credit score is 580 or 600 or 620. Well, plan on whatever it was before, it's going to get higher. So each individual investor, you're going to probably start seeing 640 across the board. You'll have some 600s and 620s here and there. Again, talk to a mortgage broker. They're able to actually go out and shop these things for you. So if Bank A doesn't have it, and let's say you need a 620 credit score, and Bank B doesn't have it, Bank C doesn't have it, well, your mortgage broker could go and shop 15, 20 different places to find who has that loan for you. Same on the jumbos, the conventionals, FHA, VA. So talk to your mortgage broker. Now, on the conventional side of things, again, the rules themselves aren't changing. Fannie Mae and Freddie Mac aren't changing the rules necessarily, but the investors who sell and package and invest in these things, the market has tightened up so much on those. Here's a couple things you're going to start seeing. Number one, you're going to start seeing debt to income ratios, DTI. Before, VA, you could qualify. You can get a 64 DTI, debt to income ratio. You're going to see a lot of investors start capping that at about 40, 45%. Same with conventional, same with FHA, especially for lower credit scores. If you have below about a 680, you have a very hard time getting a high debt to income ratio loan approved over this next couple months. The next thing you want to see that's going to change, a lot of investors right now don't let you actually lock your loans until you have underwriting approval. You may not see what's called a par rate. Think of golf, par, right? A par rate means you don't have to pay any money to get this rate. That's a par rate. So as an example, 4% may be par. And if you want 3.75, you have to pay $2,000 to get that. In addition to your normal closing costs, you may find that you're having to pay for the rate, no matter what it is, especially people under 680 on the credit score. You're going to start seeing that. It's not all doom and gloom. Here is the good news. A lot of things are changing, and they're not changing for the bad. Couple things. Number one, closings. Colorado allows, as a lot of places allow, for video notarizations. Your bank has to allow it, but you can do the notary. State of Colorado now allows you to do video notaries, which is fantastic. The next thing that a lot of places here are doing is they're doing drive up closing. So we have lots of customers this last week. They actually drive up to the title company. Title rep comes out, probably wearing rubber gloves. They don't even want us at the closings now. The next thing that actually is kind of nice is Fannie Mae and Freddie Mac are being extremely easygoing about appraisals. If it's just not reasonable to get that appraiser into the house, they're allowing drive-by appraisals. Now that may slow down your process a little bit, but it does give you a lot of flexibility to get your actual deals closed. My advice to you as real estate agents, as home buyers, do longer contracts. Get a longer contract, account for all these things, and call in Mortgage Broker. Call me if you have any questions. You can easily reach me anytime, 719-231-4893 or tchase at 719lending.com.